Hey, Kurt.
Hello, how you doing?
Good. How are you?
Get my video on here.
Welcome back, everybody, to the Now What Business series. We are so excited today because we do have Kurt Rickhoff joining us as our featured presenter today. I do want to give a quick intro to all of our experts in case this is your first time ever joining us. So that way you have the opportunity to get to know who's here because after Kurt's presentation, you'll have the opportunity to go ahead and ask questions of Kurt or of any of our experts. So joining us on the line today, we have Carol Sparks. Carol is an attorney who founded the Sparks Law Office in 2009 with the purpose of advocating for the protection of small business owners. We also have with us today Megan Martin. Megan is the owner of Conquer Consulting. She's a certified executive career coach and business consulting, and she specializes in working with professionals who are looking to make a transition in their career or grow within their leadership position, as well as business owners who want to build, rebuild, or scale their businesses. Also with us is Marcel Brown, known as the most trusted name in technology. He's a nationally recognized technology expert with over 25 years of professional experience and has been working his own technology company for 18 years. Also with us is Joanne Mei. Joanne is the director of the Small Business Development Center based out at SIUE. And she spoke actually last week, or I'm sorry, 2 weeks ago. 2 weeks ago, she spoke about pivoting. So all of our previous speakers, so Marcel, Megan, Carol, and Joanne, we recorded all of their talks, and they are available at Level Up Coach LLC, which is my website. For those of you who don't know who I am, I'm Jenny Bellinger. I'm a certified professional coach who works with network marketing professionals. And also, I am a podcast host, hence the cool microphone. But our featured speaker today is Kurt Rickhoff. Kurt has been a small business advisor for over 20 years. He joined Rickhoff and Associates full-time in 1997 and has been involved in some aspect of the family business since its inception. Kurt's parents started the business in the basement of their home in 1974. This has allowed Kurt to be immersed within the challenges of a small business startup and see and enjoy the rewards of success at all levels. Currently, he is the CEO and the owner of the firm along with his wife, Mindy. They also own and operate Payroll Central. Both companies serve small businesses throughout the entire St. Louis metro area. Kurt's passion for technology has kept his firm at the forefront of delivering superior client services. And so today you're going to be speaking about lessons we've learned in the time of COVID. So Kurt, I'm going to go ahead as you're pulling up your screen. I'm going to let all of our participants know that you guys, as Kurt is giving his presentation, you have two different ways, actually 3 different ways that you can let us know that you have a question. We have a chat feature at the bottom of your screen. There's also a Q&A feature that you can utilize in order to ask any questions. You can type those in. You can type them in anonymously if you don't want anybody to know, and that's fine too. And then if you want, you can also raise your hand and I can give you access to ask a question if it's more in depth than you would prefer typing out loud or typing out. So Kurt, the floor is yours.
All right. Well, hello, everyone. Thank you for joining, first of all, and thank you, Jenny, for hosting and all the wonderful panelists that we've heard from so far and going to hear. And then next week is Jenny's week, I believe. First of all, can you see the screen okay? Is that the slide?
Yes, we can.
All right. Fantastic. Checklist number 1 is done. Hope everyone, of course, is doing well and staying healthy. Most concerned at this time during this wonderful situation that we're going through. If you're not taking care of yourself, it's hard to take care of your business. So I do have a lot of information I'm going to go through today, so I'm going to go kind of quick. As Jenny mentioned, please feel free to put questions in the Q&A, raise your hand, however you want to do that, whatever's preferable for you. Again, tend to get really enjoy and love doing this, so I do tend to get quick, and it's a lot of information to absorb. Some of it may even seem kind of rudimentary for some of you, but and some others hopefully it'll apply very well. But just bear with me if you will. If we could, it works well when we address all the questions at the end, but if they start stacking up or anything, Jenny, feel free to let me know, and we'll jump on the questions at the best timing.
Will do.
All right. Well, we're going to go ahead and get started here. Now what business series lessons learned? All kinds of lessons over the last couple months. Here we go. First of all, of course, tax and legal advice disclaimer. The information contained in this presentation is informational purposes only. You should consult a tax, legal, and accounting advisor before engaging any transaction. Carol would not let me on unless I did that, right, Carol? I just put my introduction. I took these slides. I'm not going to go through this by any stretch. Jenny already gave me a much better introduction anyway, and made me sound much better. So established 1974, and the interesting part is in the basement of our home in the large town of Albers of 450 people. Took these slides out of, I was fortunate enough to speak in Las Vegas last year to a water quality association group. So I kind of took a lot of some of these slides from that because the topics were similar as far as financial statements and things like that. And here's our brands, two of them that Jenny mentioned, Rickhoff and Payroll Central. I included this as well because of the firm mastery that you see there on the right is going to be referenced quite a bit in this presentation because I took a lot of information from that. It's our online business education platform that I developed with a couple friends of mine across the country that we're just getting it all completed and rolling out very soon. But I took a lot of that from that. So there's Core 24 because there's actually 24 modules and lessons, if you will. All right, before we get started into the lessons learned, I thought I'd throw out a PPP loan update because first of all, it seems only fitting that if I'm sitting in front of a computer in a webinar, presentation, Zoom meeting with my staff, we have to discuss PPP loans anymore. But the big reason is the forgiveness application was released Friday afternoon by the SBA. Great, gave us some, finally got some guidance on the forgiveness piece and the actual application that will need to be turned in after the 8-week period when businesses will be applying for the forgiveness portion of their loan. The guidance provided some great information. The alternate payroll period for biweekly or more frequent really gave us some help, if you will, because it was going to be quite complex if we had to start the forgiveness on the date of the disbursement because it could fall in the middle of a payroll period. This allowed much simpler administration and accounting for that, the payroll piece. We just move it to the first payroll following the loan disbursement. I think that was the intention of the bill anyway, to include 8 weeks of payroll. It did include some wording called payroll costs paid and incurred during the 8-week period. Again, the word "and" is extremely important on that. It does not include just paid or just incurred. It's paid and incurred. Non-payroll costs paid or incurred during the covered period and paid on or before the next regular billing date. So if you incurred that bill, but you don't get the bill, you incurred the cost, but don't get the bill until after the 8-week period, you still get to take the portion that was incurred during that period, according to our interpretation of this. This was a big one. The owner compensation was limited to $15,385, which is the equivalent of $100,000 a year, or 8-week equivalent of 2019 salary, which is lower. That's the brand new part that first time we ever saw that. So that changed quite a bit, the 8-week equivalent of 2019 salary. So that changed some of the planning with that. The FTE, a lot more details on the calculation of it as well. So some really great information released Friday. I'm not going to go into great details on all of it. Because especially the FTE, there's a lot of calculations and dates and things like that. But just know that the application was released. Now, as this PPP loan has gone, the original application to apply for the loan went through about 4 or 5 revisions. So, and Joanne could probably speak much more intelligently and informed about that. If that looks like anything will be revised later. We're just going on the basis of history says there, at least more guidance, I assume, will be coming out as well. All right, jumping into the lessons learned portion of this. Businesses through the COVID-19 situation, the pandemic. The way I'm approaching this is there's 2 different situations that businesses really had to approach. We've already kind of heard, we've heard from others. Carol talked last week about protecting your business and protecting everything during this situation. Marcel talked about the technology piece and how to approach and use working remotely and things like that. Megan talked about taking care of yourself. Joanne gave an awesome update on that, on the SBA and pivoting and your business and what to do there during something like this. Of course, something that we've never seen. So I approached it splitting the situations up. The emergency assistance, what we went through, and we learned a great deal of what small businesses were struggling and was exposed, if you will. Or I look at it as more of an opportunity, not exposed, to make yourself better, to improve on your business and things like that. So really time to educate yourself and upskill yourself in your business, putting it at a position to really excel when things open up again. And then the other part of it was the forced closure, severe reduction in revenue. Again, a lot of businesses went through that, are still going through that. The forced closure, the restaurants are still trying to get back, as well as personal services, some retail stores, and our others were allowed to stay open, but the severe reduction in revenue led to some cash flow budgeting and things like that. Going to go through this again, the opportunities to improve that these businesses kind of ran into, roadblocks during all of this. And I polled our wonderful panelists to get their ideas as well, what they have talked to and found their small business clients. So I pulled that all together with the experiences we have here in the office at our firm and came up with these topics, if you will. All right. Emergency assistance, as we all know, Congress, the SBA, and everybody came out with wonderful plans and options for businesses to get some assistance. There was payroll tax credits, the emergency sick leave, the PPP loans, as we've talked, emergency loans through the SBA. Again, a lot of assistance was drawn up by the government, but all that assistance needs information in order to obtain that assistance. Emergency or the employee retention credit, for instance, things like that. So here's the lessons learned from that and what we've seen, again, as an opportunity for small businesses to improve, position themselves better. Number one we saw was the need for organized records. No matter the size of business, organized records is key to getting this emergency assistance. From payroll reports for those credits, there's the Family Emergency Leave Act, the FML Emergency Family Leave Act, sick leave. You need to have payroll reports and you need to submit the reports to get your payroll credit for that. You needed organized records for the loan calculation as well for the payroll reports. Since that PPP loan was based on your payroll, 2.5 times your monthly payroll cost, if you didn't have that readily at your readily handy, it took longer to put that together. And with the PPP loan process, for anyone who went through that, knows it was a very short period before that initial application was opened up. And at that time, we had no idea if they were going to allocate more money to this program. So initially, when they opened up the application process, it was those who were ready and got that information into their banks the quickest, got the loans the first, bottom line. And you had to have everything into the bank in proper order. We found that the applications and packages that we put together, the bankers really enjoyed working with because it was complete, and they knew exactly how to find everything. So again, organized records. It should be anytime, not just during these times, to keep your records organized. There's other reasons, obviously, for potential audit risk. Organized records, the IRS wants to audit you, and just it's good business, so you can reference back and find the history on any of your income and expenses as well. Another thing we found during this emergency assistance is banking relationship. You know, we're really stressing to our clients now is have a relationship with a local banker and how important that is. And by local banker, I would suggest, and we're pushing for the smaller banks, community, maybe up to regional bank, perform the bets for these loans because they wanted to work for their customers. We found with the national banks, the global banks like a Chase, US Bank, really failed their customers because they took in all the applications they could and just shoved them into the pipeline. And after that, it was, well, the bankers were given answers like, we don't know. We submitted, we don't know when you're going to get it. That's between, we even had one banker in a group I'm in tell their client, I don't know, it's out of my hands from here. You're going to hear from the SBA when it gets approved, which is not the fact. It was supposed to go through the banker. So again, banking relationship, line that up. Not everyone's perfect. I'm not pushing any particular bank. I'm saying how important that is. We're going to talk about that later too in the presentation, having a good banking relationship. And it really also goes beyond, it's really having that partner relationship with the banker, your attorney, the technology. And I'm not just toting all the people on the panels here, but as a good business owner, you need those people in place so you can act quickly. Updated and accurate financials, and that's one we're going to spend a little more time on, just because that's one I know most about. And it's taking some of the information from that Water Quality Association presentation. We found those with the most updated and accurate financials, quicker and easier loan applications, ready to start accepting like I talked about before. Friend is a banker. I got friends that are bankers on the board of a small bank in Trenton. And, you know, the stories they talked about, those with accurate financials and goes with organized records. If you had that application ready, you got your loan fastest. And if you recall in that first loan period, the money went very fast. I think it was about 10 days or so, and it was gone. And, you know, so there's people out and couldn't get it. That's one reason they opened up more money for the PPP loans was people didn't get them, and partially because they just didn't have all their stuff accurate and ready to go. So plus accurate financials, if you have to prove your loss of business, some of the loans offered, you had to show proof of loss of business. It had to be, you know, there had to be a loss of business in order to get the loans and other assistance. Also for insurance claims, if you have a loss of business insurance, in order to apply for that, you have to show proof of that loss. Also for the employee retention credit that's being offered to prove that your business is down over 50% from the prior year. That's the only way you can qualify for that credit. So updated and accurate financials. Talking about financial statements a little bit more. Experience shows that 80% of small business owners admit to not fully understanding how to read a financial statement. And certainly don't need to be a CPA or a high-level accountant to understand and read your financial statements. And talk about that a little bit next. But I look at it kind of, Carol took care of a contract negotiation when I acquired another firm. She took care of all that. She understood the contract and everything else at the high level, the deep details. But I had to understand that. It was her, you know, she explained it all to me that I eventually needed to understand it, but I didn't have to be the expert in the contract. So it's kind of similar the way I look at it. Put a chart here. This was just for trying to get a laugh out of the audience in Vegas. 80% is the blue that don't understand and they admit to not understanding. The gray is those that do, and the orange is the other part that just lie and claim they do. Of course, that is not based on any real statistical data other than the 80%. Some tips on your financial statements. Keep it simple. Very simple. A concise chart of accounts. Do not overcomplicate it. Do not start with the standard QuickBooks chart of accounts. I've seen this way too many times. People use QuickBooks. Phenomenal tool. Phenomenal tool. We use it quite often here. We have a lot of clients on QuickBooks or QuickBooks Online. However, when it walks you through setting up your company, it starts you with this huge chart of accounts that doesn't really apply to your business. Start with a very concise chart of accounts. You can always grow it, but starting large it just muddies the waters, and you end up coding expenses in multiple places for the same expense month after month. Limit the bank accounts and credit cards. You don't need 10 credit cards and 14 bank accounts unless you're an extremely large business. I've talked and gave part of presentations before about credit cards and how to kind of handle those and suggested methods, if you will, of keeping a business card and a personal card and maximizing, the reward credits, if you will, because those are very lucrative, or at least were before this, the COVID outbreak. And I presume they're probably going to even be more lucrative now once we can travel, especially the travel cards. But there's, told many startup clients to utilize those and enjoy the rewards from those, because those currently are untaxable benefits, if you will. My wife Mindy has not paid for a flight on a Southwest Airlines flight in about 3 to 4 years because we get the companion pass. I get the companion pass. She flies anywhere I go for the $11.20 TSA fees. Same with, like, again, limited bank accounts. You don't need a bunch. All it does is overcomplicate things, but especially if you're transferring money back and forth. Multiple bank accounts is okay, but again, watch how you set them up. Don't just set up bank accounts to have bank accounts. If you're transferring money back and forth between accounts a lot, especially, all you're doing is muddying your water, creating administrative complexity that you don't need and your accountant don't need. They'll probably charge you more because it's more transactions they have to reconcile. The next thing is keep it easy. Accounting systems are easier than ever. QBO and Xero are great examples. QuickBooks Online and Xero, they have a ton of great data integration, bank accounts, credit cards, POS systems, and vendors. Some vendors can link directly. Also, document storage. Companies like a Smart Vault integrate seamlessly with these new open online service accounting systems. And it provides you real-time information. You have a pulse of your business immediately. We have a lot of clients, a great deal of clients on QBO. That way we can collaborate with them in real time. At the same time, we can see if they have problems and things like that. So to collaborate with your accountant using one of those items or online is just phenomenal, giving you real-time information. Next, things we found, and I know that was shared from the panelists as well, and we saw it too, was entity choice. And not just being in the right entity, but also making sure you're administering that entity properly. That's really probably more the issues we found, or the opportunities, again, to do it right and improve the business processes for yourself. But I added choosing the right entity because I got some information on that as well. The mistakes we found: sole proprietor, mixing business and personal. This is a no-no for any business. I don't care if it's sole proprietor, LLC, S Corp, but we see it at more of the sole proprietor level. I guess because it's easy and that's sole proprietorship. And I don't care what size you are, mixing business and personal. Now, I'm willing to bet Carol probably gives that advice at the first meeting when she sets up an entity. Keeping everything separate is vital for so many things. And I'm not going to go into the corporate veil and things like that if you're setting up an LLC and S Corp. But even at the sole proprietor level, I tell clients all the time, I don't care if you're the direct sales, and you're selling some of the products, the makeup products, the sports nutrition products, direct sales like that, doing just a little bit of that work. Personally, you got to keep the business and personal separate, set up a business checking account. That not reporting revenue for sole proprietors is a big, we'll call it a mistake, because I'm sure it's done by accident. But not reporting revenue and then suddenly getting a 1099 later is a problem. And then I've seen sole proprietors take wages. You cannot take wages as a sole proprietor. You cannot get a W-2 and pay, as a sole proprietor. There's proper ways to take the money out of the business. Again, that's mistakes we found. And then when applying for loans, what hurt them, they didn't, a sole proprietor, if they didn't report their income properly or mixing their business and personal, again, they couldn't get everything together and ready to submit for the loan. But also if they didn't report their income, the loan for a sole proprietor was based on their income, not payroll for a small sole proprietor. So they really hurt themselves out of that loan process. LLC guaranteed payments versus wages, similar thing. If they taken wages instead of guaranteed payments, how that's taxed. We see that all the time on LLC, probably because it's the most popular entity choice right now, it seems to be. S Corp, we see officer wages, none or too low. This one was a big one for the loan process. S Corp's not taking any officer wages, then wanting to put it on the books so they can get more of a loan, because since that was based on payroll. Well, it's too late. You should have done that from the beginning. That is a tricky one, because the IRS requires reasonable compensation. What is reasonable compensation? Well, that depends on your what you're doing, your industry, what you're actually doing for the company, and what your title is, if you will, and the profit of the company. I could probably talk to 30 CPAs and get 32 answers of what that reasonable comp should be if I handed them all the same company's financials. Taking advantage of the chosen entity. That's the things we see too, is people not actually utilizing that entity for what it can help you with, tax-wise and things like that. And also like reimbursing for personal expenses that are actually business expenses, reimbursing yourself for mileage or reimbursing yourself, depending on the entity, for expenses that you have paid for the business. And one other suggestion, review regularly. People will set up an entity, run with it, and never look at it. Again, we're always looking at our client's entity choice. Granted, it doesn't change often, but with the most recent tax law, about 2 years ago, the Tax Job Creation Act, this was a huge one. Everybody started thinking they were going to jump from an S Corp back into a C Corp. That was the initial gut reaction, because the C Corp tax rates dropped dramatically. But after we ran the numbers and it took some really digging, most of them didn't. We ended up switching more C Corps into S's again. And finally talking to some people that were adamantly opposed into that, showing them on paper, if you will, the advantages. I put this in. I'm not going to go through every box or anything. A nice entity comparison. It shows the entities across the top and characteristics on the left, the numbers of owners, ease of setup, cost to set up, and things like that. It's just based on the complexity. This is by no means a perfect grid. Don't go somewhere and say, well, it says this should be minimal to set up. Well, first of all, it doesn't take into account the state's fees and everything else, but it's just a general, less costly potentially to set up. And again, it depends on the complexity. Nice chart again, but then that's one of the things from Core Mastery. I have to make sure I put the trademark on there so I don't get in trouble. All right, and here for entities, proper maintenance. That's why I talk about the administration. It's not just for compliance, but also to take advantage of that entity. You set it up, you spent the money, now take advantage of it and do it right. Again, I'm not going to go through all of this line by line, but it talks about depositing all business revenue into business accounts. Don't mix, not mixing, using a business credit card, keeping up with the tax and legal filings. On the right side, the corporation specific, very important. It looks complex and difficult, but it's not. My suggestion is you hire someone like Carol, takes care of as I throw it to her, handling all of that. She can make sure you're in compliant, making sure you have all these pieces in your minute book. Very important again. And Carol could go on about talking about that, maintaining that corporate structure. Otherwise, you really don't have the protection you thought you had. And really, the IRS could pierce that and say you're not operating as a S Corp. You're really operating as a sole proprietor and hit you with a lot of taxes as well. So again, we see it a lot as people want to set up an entity, but they don't want to spend much money or things like that. It doesn't cost as much as you think, first of all. Second of all, it could cost you a lot more by not doing it right. That's the key is if you don't do it right in the long run, it could cost you more in taxes, penalties, lawsuits, and things like that. Much, much more. So do it right from the beginning. All right, and on to the last couple items that we're seeing, more so with the forced reduction, forced closing and things like that, reduction in revenue. Cash flow is one of the biggest challenges for all businesses, all sizes. It continues to be every day, even when there's not a pandemic. Cash flows up and down for some business. Some businesses seasonal. We see that as well. But it's always one of the biggest challenges for business of any sizes. You see the statistic down below. 82% of businesses fail due to the reason they fail is poor management of cash flow. And we see it at all levels. Some businesses have awesome cash flow, but coming in, but if they're spending too much, or even taking too much out personally, they no longer have great cash flow. And then that inflow comes to a screeching halt like it did for a lot of people 2 months ago. It really causes a lot of trouble. So here's reasons for managing your cash flow. We talked about it. Banks use cash flow to make lending decisions. Lending decisions is not just made on collateral. It's made on really your ability to pay that loan back. They run cash flow coverage ratios. They run cash flow ability to pay that payment, but also make sure you can pay all your other bills too, because they know banks a lot of times get pushed aside because you're going to pay your power bill to make sure the lights stay on before you pay the bank. You're going to pay your payroll and things like that. So banks use a cash flow formula to make sure you can cover that payment. Another reason to manage cash flow is you avoid higher interest rates or late penalties. So if you're managing and paying your bills on time, you avoid late penalties. Also, when you go to the bank, if you have good cash flow coverage and you're within their guidelines or better, you get a better interest rate. You're lower risk. Bottom line, they can offer you a much better rate if you're lower risk and you have better cash flow. Expansion and growth, it helps if you manage it. If you want to expand, if you want to add a building, if you want to add a location, you need money in the bank and manage that cash flow. Plus to project out and say, I need to add a $200,000 loan. I need to build out my restaurant. I need to build out my next location in a year. Well, you need to know how much you have to put down from the bank and save up, plus what your payment's going to be after you start. So again, allows for expansion and growth if you're managing your cash flow properly. Increases the value of business. Historically, we have seen in the last 5 to 10 years, businesses are selling on a multiple of cash flow. Years ago, when I first started, Dad first started, a lot of them were based on a multiple of gross revenue, just gross revenue. Speaking specifically from accounting firms, they still talk, and that's where the price point might get started. But to really truly find a value of your business, a lot of it's based on cash flow. Because again, you could be bringing in $10 million or $5 million, but if nothing's going to the bottom line or nothing's going into the owner's pockets, what good is it? You're just churning money. And a potential huge risk, because if you're not bringing it in, it's still going out. Now you're losing money. So again, increases the value of the business. If your cash flow is a higher percentage of your gross revenue, the value just rises exponentially. Tips for managing cash flow. First of all, owners pay, draw. Number one, let's worry about that, right? Let's worry about ourselves. Just kidding. before taking money from your business, see your accountant for tax strategy. Again, so often we see, and we don't do a lot of annual returns and annual work because we work with our clients all year long. So we don't do this and we advise on that. But when we do sometimes, or see a new client come in and before the end of the year or to do a tax return for the first time and find out they took all the money out of their business and now they owe $10,000 in taxes. They have no way to pay it because they took it all out and didn't do it properly, where they could have avoided some of that taxes or just, again, know that they were still going to owe that tax. One time we took on a new group of doctors, and the reason they left their old accountant was because the accountant didn't advise them. And when it came to do the tax return, because they had not a lot of money in the bank, and combined they owed $80,000. I used the term they came up with, which was called Tax-mageddon. And I like to use that often. I've never heard that and gladly stole that from them with permission. So I guess I ain't stealing. Bank line of credit. Establish that relationship with your lender and set up a line of credit before you need it. When you need it, it's too late. Establish that, because especially depending on your business, if you're seasonal, you might need to buy a lot of product or inventory before the busy season starts and before that influx of revenue. And again, it doesn't strain your cash flow, so you're not paying your bills, which creates penalties, higher interest rates. Vendors start charging a finance charge and things like that. A line of credit is not a bad thing if used properly. Matter of fact, it's a very beneficial tool that really good businesses use all the time. On the bottom, setting up a budget and a plan. Have a budget, have a plan. It helps predict that cash supply needs. Again, especially businesses that it's up and down and not just seasonal, but it's hard to predict. But have that budget plan, because historically, June's always a slow month. July's awesome. I know my mom, going all the way back to when I was in school and my brother was in school, always said July was the toughest month. For some reason, all the bills came due in July. And ironically, Mindy, my wife, said a few years ago, it seems like it still occurs. The tuition bills are coming in, or real estate taxes or whatever. So again, having that in mind, knowing that July, that there's a lot of extra outflow, whether it's personal or business, but taken into account helps. Monitor your AR. Reminder, you're not a bank. Your accounts receivable. Collect, allow credit cards, shorten payment terms. Don't let your customers owe you for 60 days if you need their money in 30. If you need it quicker than that, shorten them terms. And I know it's a balance. You don't want to upset your clients as well. But working together with your customers, realizing, you're not their bank and you can't finance them, or you're going to have to charge finance charges. And nobody, wants to do that because of calculating all that mess. Collect a percent up front. If you're dealing with larger projects, if you're dealing with a higher dollar amount, collect a percentage up front. Make sure that customer has some skin in the game. That way they're less likely to just leave without paying, or you do all the work and then they don't use it and say, oh, okay, never mind. Get some money up front, get a deposit, helps a great deal. We've talked to clients over the years with that before, and really increase their revenue and decrease their AR by a ton, and help their cash flow, reduce their expenses, because suddenly they weren't using the bank line of credit as much. They weren't paying their bills late because they started taking a 50% deposit. On the other side, monitor your accounts payable. Work with your vendors, the payment terms, the payment plans. Use a credit card. Be careful. I know that's like a danger zone, if you will, but you just got to use it responsibly to pay your bills at times. Again, it actually builds in some added additional time to pay. So you charge it today, your vendor's paid, maybe you don't have to pay that for 10 days, 15 days or longer. And again, work with your vendors, work with your suppliers and the payment terms, the payment plans. Most likely they'll willing to work with you on those if you're a good customer and you pay on time normally. Again, use that credit card to build up them points if you're responsible. All right, some budgeting tips.
Hey, Kurt, before we move on to that, because we did
Sure.
have somebody ask a question Now, Carol, I'm assuming that his last slide probably answered your question. It did. Okay, good. But before we move into the budgeting tips, there was somebody who asked a question about tax advantages of S Corp over an LLC. And then she gave some clarity on her question, which is, what is the advantage of being taxed as an S Corp rather than as an LLC? If a business registers as an LLC, should they remain disregarded or should they opt to be taxed as an S Corp?
Well, one advantage could be, depending on the situation, again, an S Corp is a pass-through entity like an LLC, unless it's a disregarded entity. Disregarded entity is on your 1040 as a Schedule C. But an S Corp is a pass-through entity. The unique part of an S Corp, I talked about reasonable compensation. You pay yourself a owner's salary or as an owner. That is an expense of the corporation. The profit of that S corporation passes through to your personal tax return. That profit does not have any self-employment taxes. So it's just taxed as your regular tax rate. A disregarded entity at a Schedule C, you're going to pay self-employment tax on all the profit on top of your regular income tax rate. An LLC taxed as a partnership is a pass-through as well, but there's a self-employment tax on the whole thing. So the savings could potentially be some self-employment tax if juggling that. As long as you're paying yourself a reasonable comp, you could potentially save some self-employment tax. Again, every situation is different depending on the profit, the industry, and things like that. But for the most part, that's the simplified version.
Good. Thank you so much.
You're welcome.
She sounds like that answered her question. So I'll let you continue with your presentation. Thank you.
All right, sure. Budgeting tips. Fill out the budget month to month instead of for the entire year at once. Sometimes it's biting it off in smaller chunks, because I know developing a budget is not necessarily a favorite task of anyone's. It's trying to project outlook, and sometimes it feels like I'm limiting myself what I can do. And we don't like those confines, but do it a month to month, or if it's easier for you. And definitely try and mirror your accounting profit and loss statement for your budget. Ask your bookkeeper or accountant if you're stuck, but it's got to mirror that. Otherwise, in order to track it, otherwise you're almost keeping two sets of books. You really need your budget on top of that P&L so you can track it every month or throughout the year. Use online budgeting tools or spreadsheets. There's a QBO has a budgeting tool, an Excel template that I'm not sure if I included, but there's Excel. You can Google budget template from Excel and download one. I know we have one in our Core 24. That's why I couldn't remember if I downloaded that and shared it on a slide or anything. But again, Excel works perfectly fine. It just potentially might have double entry. That's where it's nice if your accounting system has budgeting with it. And the bottom line is get assistance. Don't be afraid to ask for help. Again, budgeting. And if you're a startup, because a lot of this is based on your budget is based on historical. If you're a startup, look into industry standards. Find out if you can find out more about your industry. There's information out there on that. Typical cost of goods in your industry, typical what marketing percentage should be, typical cost of utilities and things like that in the area, and some of that's easier to budget out. All right, some more budgeting tips. Here's a simplified budget for the year, showing this here. Review areas to cut expense. Sounds simple, but going through that during these times of, if your revenue is reduced, what do? You can't just generate more revenue all the times during these situations. So you got to look for areas to cut expense. Where is that? Where do you think? And it's got to make sense. Sometimes the old proverbial, we cut our nose to spite our face. Doesn't make sense. Make sure that expense that you're trying to cut doesn't affect your business and hurt you even greater than the dollars, your savings. For instance, one way is don't be afraid to call up and review your telephone bills and your internet costs and find out and do some digging, see if you can cut those costs without actually cutting service. Update future months for decreased revenue. So update your budget. Time to, if you know revenue is decreasing 20% a month over last year, figure that in so you know where you stand. Use that projection with cash flow and balance sheet to determine if cash is adequate or action needed. There was a tool we used available to us this year that I've never used before during this pandemic. It's called a burn rate. How fast were companies going to burn through their cash given what was going on? We look at their historical and looking out forward, what is the money you need day to day that you cannot eliminate? Rent, for instance, potentially, depending on what your lease says, you got to pay that. Now, there's been some forgiveness and things like that, but that sort of thing is, what's my burn rate? How fast am I going to burn through this cash? And finally, review your business plan. Update areas that are needed. Look for opportunities to pivot. That's a word I know Joanne used, and things like that if needed. Look for, new services. When I say update areas that are needed, because things have changed. It's your business plan you drew up originally. It may need to be, some areas need to be updated just given what's going on. Your cost of doing business might be a lot more. Reading about how restaurants and things like this are, the amount of money they're spending on PPE, personal protective devices and things like that, and equipment. So it's time to update that as well. And look for opportunities to pivot if needed. Do you need to add new services? That's what this online education, Core Mastery, we're adding that. It was in the pipeline anyway, but I need to add that to my business plan now. Restaurants are adding delivery, for instance, that never delivered before. Finer dining restaurants are adding delivery. First, they tried, some of the delivery services, but found out they couldn't make money at that because they had to pay them, and it came out of their margins are so tight they couldn't afford it. So they're heading to add delivery or curbside service. And some of them are talking about keeping that because it's been such a hit. New product, packaged drinks. In Missouri, they're selling margaritas and packaged drinks. They're trying to get that permanent, but right now it's just temporary. But who knows? If they can allow that permanent, suddenly they're selling packaged margaritas out the front door, which was not allowed before. Change of working conditions. Marcel talked about it. Remote workforce. How does that adapt in your business plan? How are you going to deliver your services now? We're being forced to deliver a lot more electronically here, and so are a lot of personal services. Well, how does that sit in our business plan now? We're geared up for it. Why don't we continue that and look for opportunities to expand on it, not just to keep doing what we're doing today? Here's 6 keys to a successful business plan. Again, I'm not going to go through this, just a lot of awesome information there to develop a business plan and cash flow, things like that in your financial analysis. In the Core Mastery, that's one of the two in the toolkit as well. I added this. This is just a sample roadmap. It looks more complex than it is, but it gives you an idea. If you want to be, put some goals down, and it talks about, what's it going to take to hit those goals, number of customers, clients, revenue, and things like that. It just gives you an idea of how to spec out that annual roadmap of what it's going to take to get there. It's easy for me to say, oh, I want our revenue to be X, but what's it going to take? How many clients, how many customers is it going to take to get there? That's what you need to start with. And finally, I will promise to take a breath and field questions.
All right. Well, at this point in time, I don't see any questions in the Q&A or the chat, but at this point, people might be going ahead and typing them in. That was some really great information. I know people are probably going to be curious to have access to the video later to rewatch, because oftentimes when we're hearing stuff that's brand new to us, or we've heard it before, but we haven't heard it in a while, we need to hear it again. So keep in mind, everybody, that you'll have access to this video recording through our through my website, levelupcoachllc.com. In order to get a copy of this. Kurt, will we be able to get a copy of the PowerPoint to be able to share there as well, the slide deck?
Yes. I'll get to verify. There's a couple items in there that I need to verify I can share, but 99% of it for sure. And the rest I'll find out.
Awesome. That would be great. As soon as you have a version that's available, just send it to me and we'll
Yep,
get it up on the website as quickly as possible.
certainly.
Awesome. Carol has a question. Carol, you can go ahead and unmute yourself.
Perfect. Thank you. Kurt, excellent job as always. You took a lot of just really high level things and you took it down to an easy, comprehensible subject. So thank you so much for all of that great advice. I want to revisit what you said about reasonable compensation. This is always a critical time where when I sit with my clients and talk to them about their LLC, and many of them want to elect that S Corp election, and how to start that. Can you talk a little bit about that? And are you using a calculator to do that, or how are you advising clients to address the reasonable compensation?
We don't have a specific calculator. We look at the profit. You know, if somebody came with an LLC and look at their profit, and again, what they're doing, if it's an attorney, a doctor, a professional level, it's a lot different than a different level. What the reasonable comp is. The IRS is going to look at that and say, a doctor should earn more than $25,000 a year and take 800,000 in profit. So it's really that gauge. What we feel, some accountants use 50% and say at least 50% of the profit should be paid out in salary. We don't necessarily take that cut and dried approach. So a lot has to do with the industry or their job description, what they are actually doing for that entity. Because it could be a professional level, but really they're not doing anything for that business. It could easily be a professional level service that should get paid a lot more. But then if they're just really managing that business or maybe they're absentee. So we don't use a calculator. I've seen calculators before. I've played with them and tried them. But they're really pretty basic, and they use more of a straight percentage. And I think there's just too many variables to take into consideration.
Kurt, I just want to say that I'm very happy that you, as an accounting company, financial company, embrace the online services like QuickBooks Online. I know for years, a lot of accountants were really almost against those services. And personally for me, I was telling clients that it does make it easier to interface and work with your accountant since they can get the data right online. So I'm glad to see that your company is embracing those, and hopefully we'll see that continue to be a trend.
Yes, you bet. Thank you. Yeah, it was, we fought QuickBooks for years early on, partially because QuickBooks was fighting accountants. They sold their product as a CPA in a box, I called it. And it wasn't that we took offense to it as much as we had to clean up their mess. So people would buy QuickBooks and they were marketed that it was easier and all this other stuff. And then they had a pile of garbage, it doesn't make somebody an accountant. And I'm not saying what we do is rocket science either, but it did, but then I think that they started understanding like, hey, if we work with the accountants, we could sell more of our product and things like that. So I appreciate that. And definitely QuickBooks Online, I absolutely love. It's got its drawbacks, but it's like you said, we can work together, we can collaborate. I don't look at it as we're replacing us by any stretch. It might replace some of the compliance and stuff, the transactional, but we're trying to sell the advisory part, the consulting, just some of the stuff we talked about here, like answering Carol's question, here. And I'm guilty of this. Does anybody else do this in Zoom? You point to people as if you're talking to them. But anyways, but that's where, we've been doing for many years. And the way Dad started is we're not just a tax office. We do the consulting advisory. So we don't look at QBO as replacing us, and their tools are just phenomenal. Some of the integrations is from a tech geek like me is really cool.
All right. Well, thanks again, Kurt. That was an awesome presentation. We really appreciate you breaking it down. You were getting a lot of kudos in the chat. I don't know if you
Oh, thank
checked
you.
that out. They were very appreciative of the information. So thanks
Great.
again for doing that. And for our participants, we do have one more week in the Now What Business series. I will be presenting next week about sales, because this is the area in which keeps all business running. The title of the presentation is Sales is Not a Four-Letter Word, and be working with you guys how to get back into sales now, because a lot of people have been very kind of trepidatious about it, given what's going on. They're afraid to sell, and there are ways to do it that will actually help build your business, build your relationship with your customers, and begin to get you new ones as well when done properly. So I'll be covering all of that next week, and sales is not a four-letter word. So please come join us. Please feel free to invite friends to come join us. And if you're not able to join us live, of course, all of this is going to be available at levelupcoachllc.com or on my YouTube channel as well to get the replay of all of these business series. So thanks again for everybody for your time. And we look forward to seeing you guys next week.
Thank you. Looking forward to it.